Good morning, good afternoon, good day. Welcome to my weekend market roundup, 3rd of July 2021. I'm Sagar Nandi, retired IT professional, swing trading stocks using the Q systems and techniques that I developed. You may contact me using my email ID tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website sagarnandi.com, YouTube channel Trading Profitably, and Twitter handle Sagar Nandi. You are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. I use the Q systems for making trading decisions. They run on the underlying TradeStation and Metastock platforms. That was the last slide. Let's continue with the live system. Starting with a look at the global markets with Australian index AXJO. In the previous webinar, we saw that the backdrop color in weekly turned bearish. This week it closed bearish as well with an indecisive shaped candle and also an indecision indicator at the top. The weekly is telling us not to take any swing trade now. Daily came down somewhat after displaying the indecision, bearish headwind and bear release signal. At the right edge, it has a trendline support. If it breaks below that trendline support, it will be bearish. You may look for shorting opportunities at that time. On the other hand, if price goes up from here, from the trendline support, we may look for a bounce up kind of buying opportunity in individual fundamentally strong stocks. Topics. Topics is near trendline support in weekly. Backdrop color is bullish but shape is indecisive. In the daily, we can see the indecision in terms of price being inside a triangle pattern formed by trendline resistance and trendline support. We will avoid taking any swing trade in topics right now. China market CSI 300. The weekly trendline support that I first identified around this point is still holding. For the last 3 weeks, the price is moving in up down up fashion. Bearish backdrop followed by bullish backdrop followed by bearish backdrop. It has trendline resistance and support both in weekly as well as in daily. That is telling us not to take any directional trade in China market right now. If the support trend line is broken, that will break in weekly as well, that will be proven bearish. If the resistance trend line is broken, that will break the resistance in weekly also, that will prove to be bullish. We'll wait for the breakout before taking the next swing trade in China market. UK market FTSE index. In the weekly, it is moving inside a range for many weeks now. 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks. More than 2 months it is moving sideways. We can see that sideways move in the daily also. Once again, unless it breaks out of the watermark resistance or trend line and watermark support, we are not going to take any swing trade in UK market. India's Nifty 50 index, this was the strongest of the global markets, and even this one is moving sideways for 4 weeks now. The backdrop color is bearish and it has also displayed a bear release signal. In the daily, it displayed multiple indecision indications. Bear release, indecision again. Created a trend line resistance, has a trend line support as well. Will not take a long trade unless this resistance can be broken. Will probably stay away from short trades unless the yellow direction line and also the trend line support is broken. Will not take any directional trade now. That was a study of the global markets. What do we see? We see that most of the global markets are now moving sideways in a way that we are not allowed to take any directional trade. Is that the same in the USA market? Let's find out, and let me use TradeStation for that. Q Elite on TradeStation using the market ETFs starting with SPY. SPY made a new all-time high. The weekly is looking very bullish. Daily is also bullish, above upper boundary, overbought. The last buying opportunity was at the swing low. That was the time, the exact time, the red candle when I closed most of my short positions. On hindsight, that was the best decision that I could make. And as I mentioned, it was not luck. It was based on a complete analysis of all the dimensions of Q analysis, market sector, market breadth, internals, everything, that I was able to make that very effective trading decisions. Now it is clearly bullish but overbought. We are not going to take any swing trade. The trades initiated at the swing low, we can continue to hold partial position in that. QQQ also made a new all-time high, very bullish. If you remember my previous webinars, the last time I mentioned there was a bullish trade in QQQ, that was right at this point in a live webinar. That was a go with flow trend following long trade. In subsequent webinars, I mentioned that we could exit partial position with profit at the upper boundary, and I also mentioned there was no reason to exit the full position because it had and still has trendline support. That decision was also very useful. The decision to enter, decision to book partial profit but not full position, all the decisions were very effective. Looking at the right edge, I will say we continue to hold the remaining position. We will not take new long position in QQQ. It is overbought for many days now. However, the other market ETFs are not so bullish. DIA, very bullish in weekly for last 2 weeks. Why I said not so bullish? Because it is still shy of making a new all-time high. I exited my short position in DIA on this day. It is very close to the trendline resistance. Looking at the bullish market in QQQ and SPY, it seems that DIA will also make a new all-time high in the coming week. If it has to reverse, it may reverse after that. It may make a new all-time high following SPY QQQ. However, we are not going to take any long trade now because it is far away from the swing low. Another reason not to take any long trade, for example, on Friday's close, that would be because the trend line resistance was just above the closing price. Still, it seems to me that it will make a new all-time high next week. IWM inside a triangle in weekly, inside a triangle in daily. We are not going to take any swing trade in IWM. Interestingly, right on this day, both for IWM and DIA, I mentioned that if I had to take any short trade, and that would be using intraday chart because there was no Q swing short setup, I would have taken short in either IWM or DIA using intraday chart. And both of them, IWM DIA, lagged QQQ and SPY. My analysis on this day about the relative weakness of small cap and Dow Jones proved to be effective once again. Will it also make a new all-time high? I don't have any clue on that. It closed Friday with a bearish shape candle, bearish color candle. This was the only market ETF on Friday that declined. That's why I'm not sure whether it will also make a new all-time high. I'm not sure about DIA also, but it seems to me DIA will make a new all-time high, very close to that. For IWM, I am not able to make that probabilistic comment because it is down on Friday and the relative performance is sharply coming down. However, if it breaks out of the trendline resistance, of course it will make a new all-time high. Currently, I'll avoid taking any trade in IWM. There is a divergence between SPY QQQ on one side being very bullish, DIA IWM being mixed. That in a way shows that the mega cap stocks are what are pushing the QQQ SPY higher, not the broad market. And we will see that same conclusion from other angles. Let's see from Q edge. On Friday, IWM dropped, and not only that, IWM is small cap, whereas Q edge, the sector, industry, rotation, advanced decline breadth and stock advanced decline breadth, they are not based on small cap. They are based on a mixture of large cap, mid cap, small cap stocks based on S&P 1500. That was also bearish on Friday. 91% of sectors came down, 74% of industries came down, 63% of stocks came down. That shows that though SPY QQQ made new all-time highs, market was weak on Friday. And if we take a step back, look at the 1 month to 1 day picture. As I mentioned several times in previous live sessions, the 1 day and 2 day graphs are flip-flopping between red and green color. It flipped to red interestingly on Friday. 2 day period is more bullish, 5 day period more bearish, 10 day period more bullish, 1 month more bearish. What does it show? It shows that though QQQ SPY are making new all-time high, under the hood silently some selling is going on, and the red color is propagating, once again I mentioned, from left to right side. For a long time, the 1 month period was bullish for a long time. for months altogether. M1 period was always bullish, and now though SPY QQQ made new all-time highs, month 1 period is actually bearish. That is showing that under the hood selling is taking place. We'll see that from other angles also, but right now I may make a comment that this is not a safe market to keep on buying. Now if you follow my tweets or follow my forum posts, in the recent past all my trading ideas have been bullish in the last week or so. All bullish, mostly bullish maybe. Why so? Because when the QQQ SPY keep on going up, it is difficult to make money shorting stocks. You may start to look for shorting opportunities, but it will be easier to short once QQQ SPY also show some weakness. At the same time, though I am sharing long ideas, I may be taking some of them. I have reduced my position size drastically. If I was, for example, risking $1,000 in a trade earlier, I'm risking now only one fourth of that, maybe 250, maybe $200. One fourth of the risk in each trade I am taking for swing trading. That is because I am taking long trades, but I am seeing clear weakness in the market that is not visible from SPY QQQ. And we will see evidence of that weakness from other angles as well. Why is it difficult to short? It's difficult to short also because there is no obvious sign of weakness from many angles, or no obvious sign of, let's say, irrational exuberance. For example, in bucket analysis, in the extreme high bucket, we expect a pullback once we reach 30-40% level or around that. But right now it is only 3.8%, far below what we would consider overbought in terms of bucket analysis. So we are not seeing overbought condition bucket level yet. Overall, how is the bucket analysis? Is that bullish or bearish? That is also somewhat bearish. 54% of stocks are below the midpoint, 46% above the midpoint, and we can see that from the red histograms being bigger than the green histograms. Bucket analysis is more bearish than bullish. Is it at bearish extreme? No, that would be at 30% level or so for the lowest bucket, but the lowest bucket is now only at 1.5%. So it is neither at the lowest extreme nor at the highest extreme, somewhat bearish. And from Thursday to Friday, it actually weakened. Percentage of stocks above the midpoint of Bollinger Bands or above the midpoint of the bucket analysis, it actually declined from 50% on Thursday to 46% on Friday. That is also showing the market was weak on Friday. We saw that from sector industry stock advanced decline as well. There is weakness visible from other angles too. Let's look at Finder, the technical breadth. The weekly balance between bulls and bears using Q technical signals across thousands of stocks. Weekly interval overall 63% bearish. Strength signal somewhat bullish, 57% bullish. Trend continuation again bearish, 67%. Trend reversal also bearish. So overall it is bearish. There is a number of bearish headwinds in the weekly interval, not insignificant but not significant yet. If it reaches 50 or higher, let's say 2% of the stock universe. I ran Q Finder for a universe of about 2500 stocks. So if it goes above 2%, 3%, from 2% onwards, it's a reason for concern. It's getting there, about 50. Now it is 37. Some concern, but not a lot of concern from weekly bearish headwind. Here is one overbought condition again from the Q Finder weekly signals. 57% of bullish signals in weekly finder, they are coming from stocks that are already at price extreme high. When most of the bullish signals come from stocks that are already at price extreme high, that is a technical breadth overbought condition, and that condition is there. Now we have to wait for it to come down, reverse. How will we find out that reversal? We'll find out that reversal from this percentage going below 50%. We'll find that reversal from bearish headwind going above 2% of my universe, so about 50 in this list. And of course, the all signals will continue to remain bearish in that case. It is overbought and it is starting to show bearishness, but the QQQ SPY are being held up. What about the daily interval? Friday's picture, technical breadth. This is also overall bearish. 55% of all signals bearish on Friday. Strength signals bullish because of large number of gap ups, and reversals equally or more bearish. 70% strength signals bullish, 74% reversals bearish. And I mentioned many times, bullish strength associated with bearish reversal, overall that is bearish. Trend continuation also bearish. There is no alert from bearish headwind, and for assessing market weakness, I don't rely so much on the daily bearish headwind that may flip-flop. I use the number on the weekly finder chart to see if bearish headwinds are reaching an alert level, about 2 to 3% of the stock universe. There is no signal from bearish headwind, but we can see in the daily interval also 57% of stocks giving bullish signals, they are already at price extreme high. That is also showing a technical breadth overbought condition. Overall, both Finder Daily and both Finder Daily and Weekly are showing more bearish color than bullish color. Another reason for being cautious with long trades. Any other weakness? Yes. Let's look at the market breadth. Extremely useful. This is also somewhere where the bigger players cannot hide the selling under the hood. They cannot hide it from Q edge, advanced decline breadth, cannot hide it from bucket analysis, cannot hide from technical breadth, and cannot hide from market breadth as well. All these breadth analysis are very useful because they are looking at inside the market, something that is not visible from outside, just like a doctor checks a patient, not looking only on the outside like the market ETFs, market futures, but looking inside. And let's look at the composite indices first. Nasdaq composite and NYSE composite. Let's look at the studies one by one using daily interval first. For last few days, the yellow line, that is percentage of stocks above 50 MA, is actually coming down. For NYSE also, it is gradually coming down, making swing low, trying to go up but not reaching the previous peak, coming down again. Though QQQ has been super strong, overall Nasdaq is not strong because the yellow line is coming down. NYSE is also coming down, yellow line. The white and orange lines are flat. They are slower. They are percentage of stock above 200 MA white line and percentage of stocks are 50 MA above 200 MA orange line. They are flat. They are remaining at a higher level that is expected. They are slower. Yellow line is most useful for swing trading decisions, and that is showing that under the hood market is weak. The yellow line never reached anywhere close to previous peak. What was previous peak? That was above the green dotted line, above 80% level. Also, the 3-month new high low for Nasdaq is tilting down. NYSE is flat. In a way, Nasdaq is actually weaker than NYSE. We can see that from the yellow line also. For last 1 week or so, yellow line for Nasdaq is going down more than NYSE. Interesting, isn't it? Though QQQ had been strongest, Nasdaq is actually weaker than NYSE. At the same time, there is no Hindenburg. Hindenburg should show up here. Phoenix should show up here. Distribution count would show up here. There is no distribution count, no Phoenix, no bingo. Baby out of bathwater, no Hindenburg. If we change to weekly interval, we see the other telltale sign of weakness, advanced decline, up-down volume, bearish divergence in both Nasdaq and NYSE. This is again something the bigger players cannot hide when they sell broad stocks but keep the market ETFs higher by pushing the mega caps higher. There are many reasons to be cautious. Let's now look at the single page picture of market breadth total view. Okay, before that, let's look at the mega cap top 20. Are mega caps holding the market up? Yes, that is true. Mega caps are super strong. In the previous webinars also I mentioned that though there was a bearish headwind, indecision, bear release, we were not going to short because of the trend line support. That was useful decision. Didn't come down. These trend lines are not easy to break in either direction. In this case support, instead it went up. It is at upper boundary. Even if I could buy, I would not buy mega caps now, overbought. The last buying opportunity would have been somewhere here, maybe even here, but not at the right edge, which is at the upper boundary. Cannot buy, cannot short. Very strong indeed. What about the single chart view of market breadth total view that combines the two composites and 4 major indices? No Hindenburg, no Phoenix, no bingo, no distribution count also. The yellow line recovered percentage of stocks above 50 MA for these two composites, 4 major indices combined together, but it didn't even reach the average line, and it's far away from the previous peak when it reached above 80%. The white and orange lines are flat, just like the composites. The 3-month new high low did not reach the previous peak. Those are all showing weakness, but no Hindenburg, no Phoenix, no distribution count. So I continue to think that market will not drop sharply and suddenly. If I change it to weekly interval, we can see how weak the yellow line is relative to where it had been in the past. In the weekly interval, there is some distribution count, but that was 3 weeks ago. Distribution counts, accumulation counts are more useful in the daily interval. In the daily interval, there is no distribution or accumulation count for the entire week or even more. So we cannot easily short also. If there was some weakness in terms of Hindenburg distribution count, Phoenix bingo, then we would be able to short more easily. That's why I mentioned that in this market it is not easy to short also. Stocks are coming down, some stocks obviously because the breadth indications are all weak, but they are not coming down sharply enough to create distribution count, Hindenburg, etc. Difficult to short. Market is still remaining bullish in terms of all the market ETFs. None of them are bearish. DIA and IWM may be relatively weaker, but they are not bearish. That's why any idea that I am sharing recently, they had all been bullish. However, I drastically reduced my position size. Let's now look at some stocks. Let's see what kind of stocks we look at. Let's look at some of the stocks I shared earlier, last couple of days. Let's look at the forum, sagarnandi.com, Q360 degrees trading techniques and ideas. I shared an idea yesterday, just before market close, 3:55 p.m. That time relates to the exact entry technique. I have two approaches. One is to enter a swing trade just before the market close after doing a Q360 degrees analysis. If I find a 360 degrees trade and I enter it on the same day just near market close, that is entering the trade on the signal day. And if I am not able to take it on the signal day, the next approach is to take it next day using intraday chart. That is the day after signal day. In this case, I identified the trade. I might have taken a position also in LPL, reduced size if I took it, using the signal day entry technique. That's why I waited till the market close. Then I am able to confirm the trade setup and take it as a weekly daily analysis based swing trade, signal day closing time entry. LPL, that is actually LG Display, a Korean company, well-known Korean company. They make display for everything from phone to TV, etc. The industry, electronic components, not the strongest, but it was improving. Over 2 days, the score was 32. Over 1 day, it was 45. And in real time, on Friday, yesterday, it jumped to 91. It was steadily going up. That allowed me to buy in the industry. And I found this more than 3-star candidate. Why I say more than 3-star? 3-star candidates are those in terms of fundamentals which are both undervalued as well as having earnings growth. And recently I was interacting with one trader. He is also looking at revenue growth. So this would be a stock he may be interested, because this is not only having great valuation, undervalued stock, great earnings growth, but also revenue growth in the last quarter. This is more than 3-star because here we also have revenue growth and from this orange color plot, we can see revenue growth is steady. This line shows year on year revenue growth. Not only steady, it is accelerating. In cyan color, here we have earnings per share improving, and even more importantly, the year on year EPS growth is also sharply going up. So this is more than 3-star candidate. It was up by 2.4% near the close yesterday. Then I looked at the technical charts. Okay, so seasonality first. I attached the seasonality picture also. There was no seasonality strong enough, either bullish or bearish in July. So that would not be a factor to make a trade in this stock. Technically, there were many signals. It had a trend line resistance and trend line support in weekly. Broke out of trend line resistance with bullish shape, bullish backdrop color. It was below trend line resistance in daily, gapped up at the open and continued to go up, closed at the high or near the high, bullish shape, bullish color in daily. In the alternate signals, we have a kahuna, which is shown here also. Also a MOBO breakout. So we have additional momentum indicators in the alternate chart. That gave me a breakout long setup. Breakout plus gap up buy setup. This was one idea that I shared, and as you can see, I went for a stock that was even stronger than what we call 3-star. It is LG Display. The stock is listed in the Korea market also, and I looked at that symbol also using Q Global. Using Q Global, I am able to check any stock in any country, and that chart also looked bullish. Korean market closed well ahead of the USA market on Friday. And I noticed the USA market chart was actually more bullish than Korean market. So it's not that Korean market was bullish and then later on people found something wrong and USA market sold the stock. Not so. Instead, USA charts closed more strongly than the Korean market. That was also additional confirmation to take a position. What other idea did I share recently? Let's look at gold. I shared an idea a few days ago. On which day? Let's see, 4 days ago, June 29th, from gold to gold miner. And it's important and very useful to look back at the snapshots as I shared it before knowing the result. 4 days ago. I don't think many people were bullish on gold or gold miners at that time because I didn't see any communication like that anywhere. But I noticed using the industry rotation in QH that gold mining here, this gold is not gold metal, it's gold mining industry. It was the weakest industry with score 1 over 10 days, and it steadily went up on 29th June near the market close, 3:36 p.m. EST. The score jumped to 120. That's a huge improvement from 1 to 120 within 10 days. That showed up as acceleration also under the pace column. So I was looking to buy either the gold ETF GLD or gold miners. But I prefer to buy stocks because then I can use my entire arsenal of fundamental strength, technical strength, industry strength, not just use the commodity strength. Commodities will not have any industry analysis. So I looked for a strong fundamental gold mining stock, and once again, you see, I found a stock that was very strong. Valuation was medium, but had great earnings growth for 3 quarters, 3 years, steady revenue growth, 3 quarters, 3 years. Revenue was also steady, earnings steady to going up. Interestingly, when I shared the chart or this snapshot, in real time, it was actually, you may say, at break even, slightly down, minus 0.06% at break even. But still, I shared it as a buy idea. Let's look at the chart. Okay, snap seasonality again. There was not enough signal for June or July. It was just at the end of June. There was no signal in terms of seasonality in the month of July. Seasonality was neutral, so seasonality would not be a decision making factor in this case. Now let's look at the chart. I shared the bullish idea using the trendline supports, making very good use of trendline supports again. In the weekly, it dropped sharply. You can see here, and in the magnified chart, dropped sharply and stopped right at the trendline support. In the daily, it in fact had a gap down open. This is the gap down open. Stopped right at the trendline support. It looks like a gap down open. I have to see the real-time chart. Not sure if there was a candle in between. Not clear from this snapshot. In any case, it came right to the trendline support and stopped there. Trendline support in daily, trendline support in weekly, great fundamentals, industry rapidly improving. That was enough for me to consider a buy trade. And in these cases, because price dropped sharply, volatility would be high, I like to use the implied volatility of options. So in this case, one trade could be to sell put verticals, but I was more aggressive than that. I took a synthetic long position. I sold the put, bought the call, didn't buy any protective put below. My stop would be very narrow if price breached the trend line support in daily, which would also breach the trend line support in weekly, then I could decide to manage the trend. That was my rationale. The implied volatility was high. I didn't want to, in this case, take a short put vertical, because that basically means I am selling an expensive option and then turning around buying another expensive option. In fact, the further out of the money I go, the options tend to be more expensive, implied volatility higher. So I would be selling an expensive one but buying an even more expensive one. That works pretty well at trendline support, but in this case I didn't want to buy another expensive one. I just sold the put option and bought a call option, making it pure synthetic long stock, in this case ETF position. Oil. This is gold stock, right? This is gold stock, gold ETF, GLD, but I didn't trade GLD. I looked at GLD and GLD was at support, but I wanted to trade a gold mining stock. So I looked at NEM. I showed the fundamentals of NEM, and NEM chart looked even better than GLD. Had same trend line support in weekly, same trend line support in daily, but the reversal from weekly was more clear. Daily also, the reversal from daily was more clear and there was no resistance nearby. The next resistance was far away, trendline resistance. If I flip back to the gold chart, it had also support in daily, weekly, but see the weekly candle shape, see the daily candle shape for gold, and now compare that with the Newmont Mining NEM weekly candle shape and daily candle shape. Both had trendline support, but the candles were looking more bullish in NEM. And in any case, NEM was one of the fundamentally strongest stocks in gold mining. So I didn't take a synthetic long in gold, I took a synthetic long in Newmont Mining. How is it working out? I have a small profit, I think. Let's look at the chart. I shared the idea right on this day based on daily support, weekly support. You see, on the closing basis, it was actually down a little bit probably compared to previous day. But I used the bounce technique to take a long position. There was already sign of exhaustion at this point. Implied volatility was very high because of this sharp drop. I used synthetic long stock and price has gone up. Even this little bit going up would have a reasonable profit because I use synthetic long position. I am continuing to hold on to the trade. Let's now look at, I'll not go through more examples from my website that I shared before knowing the results. The more you study them, the more you will come to know how useful they are. Instead, let me look at something else. Let me look at indecision signals. One trader asked me about the indecision signals that come on Q Global as well as Q Elite, Station as well as Metastock, and I shared an analysis on that here. How to use the indecision signal. I explained with the text also, but let's look at the chart. This was a chart I shared as of that time using real time, not as a trade setup. I didn't carry out the 360 degrees analysis. I just wanted to explain the indecision signals. It was on UDR and I showed right at that time when I shared it, UDR was displaying the indecision signal. You may see that in the magnified part also. Indecision signal at trendline resistance. If you applied the trade checklists for the Q setups, there was no swing trade setup. But if you notice the indecision signal at a pre-existing resistance and a bearish shape candle, you may use that to take an early entry, but you would not take an early entry using daily chart. That would not be justified. That would be taking too much risk. You take an early entry if you take only using intraday chart, so that your stop would be using 5 or 10 minute interval. That is one way to use the indecision signal. It is not a trade signal. It is not part of any of the trade setups checklists, but it gives us an early warning, and sometimes you may be able to use it to make an entry in anticipation of a setup. But if you do that, you would do that only using intraday chart, not using signal day entry technique before market close, as I explained earlier. And if you look back, the last time it had a series of or cluster of indecision signals. From there, price pulled back. When you see a cluster of indecision signals, in this case bearish indecision or indecision at the top, cannot say bearish, indecision at the top. If you see cluster of indecision at the top and you had a long position, for example a go with flow trend following long setup entered here, you would decide to exit at least partial position if you had not done that. You would also exit in this case using the upper boundary, but if you were holding on hoping for a bigger up move, you would not do that, not at least with the full position looking at the cluster of indecision signals. That was a chart I shared and I thought it would benefit everybody. One gentleman asked me about that, and then I thought let me share, look for some stocks as of Friday's close that are showing cluster of indecision signals. Let's look at some of them, and this time we may carry out a 360 degrees analysis to see if there is a trade setup. Let's look at, okay, let me look at the 3 chart template using the alternate signals as well. First one is octa, and these are showing indecision at the top, cluster of indecision at the top in the daily, and the cluster of indecision has come right at trendline resistance. It is some distance away from recent swing high, sorry, recent swing low, at which point we also had somewhat cluster of indecision, less than at the top but 2 indecision at the bottom, and also at trendline support. So if you look back from this point onward, when the indecisions came, you could start to think of buying, and you could probably be ready to buy when the bull release signal came. That would be a combination of bounce and box setup. You could get ready with the indecision signals and pull the trigger when the bull release came. And now we are at the top, opposite situation. 1, 2, 3, 4, 5 indecision in a row, then a bear release. If you look at the weekly is not allowing us to buy. Notice at the bottom, the weekly was probably turning yellow and it had good trend line support. So we could decide to buy at the bottom more easily. Now at the top, the weekly color is bullish and also there is no trend line resistance nearby. The trend line resistance is far away. At the bottom it was different. We had trend line support. So we did not have to rely on the color also. Remember, bounce setup does not have any requirement on color of the candle. But at the top it is weaker proposition to take a short because the weekly is not near resistance. Still, if you at all wanted to short, you could be ready with the cluster of indecision and short it right on the bear release signal that was on Wednesday. And when you are using trendline resistance or support resistance, in this case, one approach is to use verticals. In this case, short call vertical. In that case, you wouldn't have to worry about placing a stop. But clearly, as I explained, the buying decision was easier to make because it had trendline support in weekly also than a shorting decision at the top at the right edge. Also, I didn't carry out the 360 degrees analysis. I will not do that because anyway the technicals are saying it is not a strong shorting idea. If I find an indecision cluster with a strong justification of buying or shorting, then I will carry out the 360 degrees analysis. That would be the right approach. I don't want to carry out the industry fundamental seasonality analysis now because that may alter my judgment to take a trade. But the technicals are telling I shouldn't, so I don't want to waste time and play with my own trading mind, which acts funny sometimes. Sometimes it forces me to take a trade when I look at too many things. So my approach is, if I don't find a good setup in any of the dimensions, technical in this case, I don't want to proceed with the other dimensions. Let's look at few other stocks quickly. CRVL. cluster of indecision at the top in daily, 3 in a row, but weekly is very bullish. I will not try to short this stock, but if I had a long position taken earlier, maybe on this bullish flow day, and that would be done only using intraday chart if one took that, maybe on this bullish flow day, then I would book profit, at least partial profit, if I did not do that already. But there is no reason to try to short it looking at the weekly strong chart. DCI, this has probably more justification to look for a short. The weekly is moving sideways. Sideways may continue, and it may reverse from the current price level. No trend line resistance in weekly, but it is sideways. It is near the watermark resistance, near the previous peak. Daily series of indecisions near trend line resistance. So tomorrow, if price can go below the trend line resistance using intraday chart, not tomorrow, on Tuesday. Monday is a market holiday in the USA. Tuesday, if it goes down below the trend line resistance using intraday chart, one may look for a short trade. That is based on technicals. Let's now carry out the full 360s analysis. Let's do the fundamentals first. And nowadays I can just type the ticker symbol. It will fetch the Reuters code first. In this case seems to be the same DCI. How is the fundamentals? Does it allow me to short? Not really, because valuation is medium, has earnings growth, so not even a 1-star candidate. And in this market, when the ETFs are either bullish or sideways, but none of them are bearish, it's not appropriate in Q technique to try to short a stock that has earnings growth, medium valuation. And if you look at the revenue plot, steady year on year revenue growth going up, year on year earnings growth going up, EPS steady. So I will not try to short it based on the fundamentals. So let's look at, I have 2 more minutes. Let's look at a cluster of indecision at the bottom example. Okay, let's use TradeStation now. This indecision signal, like all other technical signals, are available both on TradeStation and MetaStock. Let's look at EVRG. Two indecision at the bottom. The stock is inside a range, inside a box. It has watermark resistance at the top, watermark support at the bottom. Price went below the watermark support but reversed, creating a false breakout. Had a bull release signal also on Thursday. That candle had upper tail, so we wouldn't buy on that day. On Friday, it had another indecision signal and it closed above the watermark support. So the daily is telling, using cluster of indecision at the bottom, we may consider buying. It has support from watermark, sideways market. In the weekly, I see it had support from many long lower tail candles. They provide robust support. And this week, though price pierced below the previous tails, it went up and closed above all the previous tails low. So buyers again came in. So the weekly would allow us to consider buying. Again, not a perfect Q trade setup, but using the indecision signal cluster of them. In fact, one is there in one is there in weekly, 2 in daily, and a breakout from trendline resistance and a support at watermark support. One may look for a buying opportunity using intraday chart if next week price goes up using intraday chart. How is its fundamentals? Let's check it out. EVRG. Here the fundamentals allow us to buy. Medium valuation, but it has earnings growth, has revenue growth as well. So it is a 1-star candidate. Pays a dividend also, nice dividend, not very high, but dividend 3.48%, and it's electric utilities. Let's check its industry. We see in itself 55% of peer stocks went down, but Friday the market was much more weak than that. We saw from Q Edge market breadth, it was weak. Let's check its relative score. Electric utilities industry relative score from Q Edge. It is going up and holding steady over 5-day, 2-day and 1-day period. Let's look at the rotation plot. The rotation is showing earlier it was very weak, score of 3 over 8 months. It gradually started to improve, and as of Friday's close it has a score of 111. Base column is showing acceleration, quite high acceleration. So the industry allows me to buy. And in fact, if you look at the sector, utilities sector is the second best performer on Friday. If I refresh the data, I think information technology was the best performer. Utilities was the second best performer on Friday. Let's sort it by 1-day performance. Yes, Infotech was strongest, and see utilities. It was score of 1. Even over 10-day period, it had score of 1, the worst performing sector, and on Friday it became the second best performer. So that is a time when using sector rotation and also industry rotation, I start to buy electric utilities. Let's drill down again. Drill down from utility sector to industries. Electric utilities is improving. In fact, as you can see, you could look for buying opportunities in water utilities also. That would be using the top-down approach. In this case, I started a bottom-up approach, first looking at stocks that are showing cluster of indecision at the bottom, technical, not this one, using TradeStation. This one, cluster of indecision at the bottom, daily, weekly, both. Then I looked at his fundamentals, high reasonable dividend, medium valuation, high earnings growth, high revenue growth, and then I saw the industry strength improving and sector strength is very much strong. Let's look at its seasonality. Seasonality is not required and often I don't need it. Actually I never need seasonality as a deciding factor, but we have the tool, so let's check its seasonality in the month of July. Seasonality is neutral, so that would not be a decision in any case. If anything, from June to July it is improving, from July to August it is improving further. But in any case, if seasonality is not at least 80% here, that is not a factor in swing trading decisions. Using industry strength, fundamental strength, technical indecision signals at support, one may consider buying next week if it continues to go up. We are at the 1 hour point. Let's end today's session here. Thanks a lot for attending. I look forward to seeing you in our next session. That will most likely be on Tuesday. Sorry, not Tuesday, on Wednesday at 8 a.m. Eastern Standard Time. Thanks once again. Keep safe and trade profitably.